Bill Lewis. I'm the Executive Director for 3CDC. I work alongside Sam and his team on the Economic Vitality Committee. Luann is on that. Matt Dusing, who's the Director of Government Services here at the county. Malcolm, is on that committee. That committee is designed to support business owners in the downtown district. So the city offers a, it's not a stipend, but rent subsidy to help new business owners coming in. So we're part of that committee that reviews the packets and assist the business owners to get started. So this conversation came up about a month ago. We were talking about the tax credits and how those can support business owners that own buildings downtown. But when we started digging into this, we found out that it's more than just the downtown. There's properties within the historic district that contribute to this, and Katie's going to talk more about this. I don't want to say much more because I'll mess it up. But so we're excited to learn about this because we feel like this is an important part of when we talk about economic development, when we talk about revitalizing our community, our downtown. If there's opportunities out there to help business owners and residents to get some help and do that, we want to take advantage of all those services. So we're glad to have Katie here tonight. This will be recorded,
yes.
Thanks to our county officials. It will be posted on the county YouTube page. So if you want to go back and review some of the information, it's going to be up there, and we're going to share that through the city page for the folks that couldn't come out tonight. So without further ado, Ms. Katie, thank you.
Thank you all for coming out. So as Bill introduced, I'm Katie Woodwarn. I'm the Site Development Program Administrator for the Kentucky Heritage Council, which is our state historic preservation office based out of Frankfort, and we serve all Kentuckians across the state. And I oversee rehabilitation tax credits and manage our state's portfolio of preservation easements. And so I hope tonight we can all walk away knowing what these are, why you might be interested, who is eligible, when to apply, and how to get more information if you have follow-up questions. So when we break it down into its kit of parts, rehabilitation has a federal definition, and it has federally mandated guidelines called the Standards of Rehabilitation. So there are certain scopes of work that qualify and are considered rehabilitation scopes, and there are other scopes that may not be a good fit for this program. So rehabilitation, it has a federal definition with guidelines, and tax credits is a dollar-for-dollar credit towards your income taxes owed. This is different than a tax deduction. Tax deduction reduces your income tax that is subject to being, or income that is subject to being taxed. A tax credit keeps your income that's subject to being taxed at the same rate, and it covers it dollar for dollar as a credit. So an important distinction is that the Kentucky Heritage Council, where I work, and my national counterparts, the National Park Service, we review the brick and mortar rehabilitation portion. So I am not a tax advisor. I do not give tax-related advice. So if you have any questions about the tax credit component of the project, you should reach out to either a tax preparing professional, a CPA, or we have contacts at the Kentucky Department of Revenue who are very helpful, and the IRS, which we can share with you if you have any questions about the tax credit component. So why are these in place? Historic properties represent a really invaluable piece of our shared heritage that in many cases is irreplaceable. Materials cannot be sourced again. It would be cost prohibitive to reconstruct one of these resources if they were lost. So maintaining them is essential to preserving our shared identity and history. But that often comes at a higher price tag. You're having to source specialty materials, get craftspeople that understand how to work with historic properties. So for the additional costs that are often incurred with these historic properties, the state and federal government offers these tax credits to help offset those additional expenses, to make historic properties and renovating and rehabilitating them competitive with contemporary construction and new buildings. So here is some project examples that show the breadth of our program. From something as simple as in the top left, where a residents were just cleaned off vegetation, did some repointing of their masonry and repainted their already painted brick. In the bottom left there, a tree fell on this home and they were able to utilize both insurance claims and the tax credits. And then on the right, you'll see more sort of extreme examples, if you will. The upper right Property was vacant for many years. It had a brick false facade covering its historic storefront, and the cornice at the top had ripped off and it was missing its windows. So they did a beautiful job bringing this building back to life and putting it into service. This is in Georgetown, and it was only for lease for a very short amount of time. I believe it's been occupied for the last 8 years. The property in the bottom right had a horrible fire on the interior, so all the windows blew out, the interior was essentially gutted, and they, again, did a beautiful job restoring this property, putting it back into service so it is an asset to the community and not a site of destruction. Who is eligible? So property owners that own a property that is listed on the National Register of Historic Places. So if you're a renter or a tenant, unfortunately you are not eligible to receive the tax credit. Only the property owner is eligible to receive the tax credit. And we have a helpful map, and I'll show you how to get to this map in just a moment. But you can type in any address in Kentucky and it will pull up information in that area. Now we have a dedicated person who updates this map regularly. However, we are nominating new properties to the National Register of Historic Places on a quarterly basis. So we are constantly adding new properties. There are properties that are being demolished, and there's, so there's this tug and pull of, push and pull of information. So this map, all that to say is that this map is tries to be as up to date as possible, but if you have questions about it or you feel like it may not, if your property may be in or out and you want clarification, you can always reach out to our office and we will give a definitive answer. So this map can be found on our website, and on our main web page under overview for rehab tax credits, there's 3 steps, and the first step is highlighted here, says search for your property. And when you click on that link, it will open this ArcGIS website, which we call the Historic Site Check. And you'll, often folks will have a little glitch here. You have to check the box in the bottom left saying you agree to the terms. And then you'll be able to type in any address and it will zoom in. Properties shown in pink boundaries are within historic districts. And as I mentioned, we do our best to keep this map up to date, but if the boundary intersects your property, like shown here on the left, let us know, we'll update the map and we'll help in any way we can. So there are 2 rehabilitation tax credit programs, the state tax credit and the federal tax credit. The federal tax credit was implemented first, and it's more restrictive. It is for income producing buildings only. And in order to qualify for the federal tax credit, you must spend what's called the adjusted basis, which is the building's value. So there's a high threshold for the federal credit. However, we have the state credit, which is more encompassing. So that is for all structure types and all uses. So owner-occupied residential can qualify for the state, commercial can qualify for the state, even tax-exempt entities, local governments. This building that we're in today is undergoing a tax credit application. So the state credit offers a lot more flexibility in the applications. Another important distinction is that the state credit is awarded in a lump sum at the end of the project, and it is refundable. So if the lump sum amount that you're awarded exceeds your tax liability, the Department of Revenue will write you a check for the difference, which is a really great asset. The federal program is not refundable, but it is ratably applied over 5 years. So you see a longer term benefit from the federal. The great news is that they can be layered. If you have an income producing property as shown on the right side, you can apply for both state and federal and stack these incentives. So if you have a property in the Main Street district, a commercial property that you own, you're wanting to do renovations or maybe a new tenant that's coming in, you can apply for a 20% state credit and a 20 and a 20% for a combined 40% credit on your rehabilitation costs. So as I mentioned, because that's such a great incentive, 40% of your project, the barrier to entry is rather high. You must spend a minimum of the adjusted basis, which is generally the value of the building today without the land. So adjusted basis is a accounting and IRS term, so there's a great article on the IRS's website if you want to learn more about how to calculate that, the adjusted basis. But for the state tax credit, 30% of your qualifying rehabilitation expenses, or QREs, 30% of those are eligible to be awarded back to you if you have a property that is your primary residence. And there's only a $20,000 minimum for that. And anyone that owns a property, any property, historic or not, knows that 20 grand goes really quick. So that right there is a roof and gutters, HVAC. So a lot of times these programs can help support work that you were going to do anyway. So for primary residences, you can get a 30% refundable state tax credit. For all others, now the sort of other category is a catch-all category. Anyone can apply under other. So if you have a second residence, if you have if you're tax exempt, or if you have an income producing property but you're not able to spend the adjusted basis, you can still apply under the state other category. So let's say you have a commercial property, you're only going to spend $20,000, you can come in under the 20% other category for a state credit. So this just visually conveys the process of the state tax credit. It is a type of investment credit. So you must invest in your property. A percentage of that investment is then awarded back to you as a tax credit. So when we look at numbers here, let's say that you invested $50,000 in qualifying rehabilitation expenses for your primary residence, so you qualify for a 30% credit, so you would get $15,000 awarded to you for the tax year that the project was complete. So that becomes especially helpful if, let's say, you only owe $5,000 that year. You would get refunded the $10,000 difference. So qualifying rehabilitation expenses, which is a mouthful, so we shorten it to QREs. And QREs are generally the costs that are associated with the historic building itself. We have a little saying that if you pick up the building, turn it upside down and shake it, if you could, anything that fell away would not qualify. So think yard work, site work, fences, furniture, draperies, appliances, anything that would fall out would not be a qualifying expense. Usually qualifying expenses are electrical, plumbing, structural, foundations, paint, drywall. Those things are all fixtures of the historic building. So a lot of times people ask, okay, well, what's the catch? This is starting to sound too good if I'm already going to do work and then you're going to give me a tax credit. What's going on? So there's no catch per se, but applicants need to be aware of the requirements before applying. So the minimum investment of QREs has got to be met. If you get to the finish line and you submit your application and you're at $19,000, we cannot award a tax credit unless the project meets the minimum investment. Project expenses are limited.
Will you say that again?
So if you have a $20,000 minimum for your project and you come in and you've only spent $19,000,
Okay.
we can't award it on, it has to meet the minimum for the project category. Project expenses are limited to a consecutive 24 months. So I warn people, don't bite off more than you can chew. If you start something, you have to finish it, even if it exceeds the 24-month timeline. We cannot approve and award tax credits on incomplete work. A lot of times applicants will say, well, it took longer than I expected, like I'll come through again, I'll finish it. And unfortunately, we have to put it on hold until that work is complete and we can certify that the work was done, was completed and done appropriately. So expenses are limited to 24 months, even if the project lags on longer than that. You have to elect which 24-month period in your overall timeline you are going to capture costs. The entire project, both qualifying expenses and non-qualifying expenses, must be described in your application and must be reviewed and approved as meeting the standards for rehabilitation in order for the project to be approved. Now, where this comes into play is new construction. New construction is not a qualifying expense. But if you're proposing a significant addition onto your property, we need to make sure that that addition is masked and sited in such a way that it will not impact the historic building's ability to be approved. So just know that everything, we can't split the baby, as they say. We can't just award tax credits on a portion and ignore other work that you've done. We have to review everything, and everything has to be approved, even if you can't get tax credits on the expenses. And then after you're approved for a project, there is a monitoring and enforcement period. And this is to ensure that state and federal tax monies are being awarded and used appropriately. So for 3 years after a state tax credit is awarded, there's a monitoring period where you need to inform us if you're doing any changes to the property. This is not transferable if you sell the property. So we want to emphasize that. If you sell the property and you as the taxpayer were the recipient of this credit, you are on the hook for that property, even if you no longer own it. So if the new owner comes in and does a whole bunch of inappropriate work that would have disqualified the project, the tax credits are subject to being revoked. And you as the taxpayer will have to repay those tax credits, even if you no longer own the property. So they're not catches, but they're things that you must know about prior to applying. The state and the federal tax credit is composed of a 3-part application process. Part 1 is just confirming the building is eligible. There's no fee associated with this. Our map is meant to help you and just preliminarily looking, but you can always submit a Part 1 application to get a final determination on whether your property is eligible or not.
Okay.
Yes.
Mike mentioned that it doesn't have to be individually listed within the historic district. If it's deemed a contributing property,
That's
it
right.
is eligible.
Yes, thank
And
you.
in Carroll County, there are 234, so
Yeah, there's more than that.
324.
Yeah.
within the historic district that are contributing properties.
Yes, there are a tremendous number of properties, and that's a very good point. Thank you for bringing that up. It's not just individually listed properties, it's contributors within a district, buildings that represent sort of shared history in a certain area. So yeah, that's the Part 1 application. The Part 2 application is where you're describing the proposed project. This should be submitted before you begin work. And then the Part 3 is submitted after the project is complete, and that's where you certify everything you proposed had been completed. And there are review fees associated with the Part 2 and the Part 3. They are tiered based on how much you're spending. So I think our lowest fee is $150, and it goes, it tiers, I think in $50,000 increments based on your costs. So as Sam mentioned, Part 1 is the eligibility, and a property needs to either be individually listed or a contributor within a National Register Historic District. Now, new construction or infill does not qualify. So once you've lost a historic building, whatever goes back in there does not qualify for this program. So also, properties that have been altered so heavily that they are unrecognizable to their historic context cannot qualify. So in this, example here, this property has been modified so much so that it doesn't contribute to the district. And so this would not be eligible for the tax credit. And if you have any questions about getting a district expanded or updated or listing a property, Marty Perry in our office is our National Register Coordinator. His sole job is to help people get properties listed on the National Register. And like I said, we nominate properties every quarter, and we have a tremendous number of properties every single year getting added to the National Register. The Part 1 form looks like this. Folks sometimes get, everybody knows this information. If you just take it line by line, don't get overwhelmed or daunted by the amount of boxes you have to fill out. It's all very straightforward information. Your contact information, the property information. On the second page where it asks for a description of physical appearance, We don't expect you to have a whole architectural narrative. We're really looking for, you explaining to us conditions of the property that we may not know about. So in an earlier example, the tree that fell on that property, the description of physical appearance, that's where they let us know. Hey, this tree fell on our property, so don't get too overwhelmed or think that you have to provide an in-depth architectural description of the physical appearance. And then the statement of significance is listed or written out in the nomination form. Again, Marty or I can help you pull that information and add that to your form. The part 2 is the proposed project, and this is where you provide us comprehensive before photos of your building. No one knows your building like you do. We have over 3,000 applications across the state, and we are a small but mighty 4-person team. So we cannot be everywhere at once. So we really rely on the photos to visually walk us through your property and to give context to why you're proposing what you're proposing. The description, or the description of rehabilitation as we call it, is where you outline all the proposed work. And what we as the reviewers are trying to do is we're trying to visualize the changes that are proposed. And we're trying to assess, are those changes going to be compatible with the historic character? So if you think about it through that lens, describe how it's going to look once the project is done. If you're planning on replacing something, tell us what you're going to replace it with. How is it going to look? If you're going to, add something, what is that additive element going to be? What material is going to be made out of? So help walk us through the visuals of your project and paint a picture of the final outcome so that we can quickly approve your project. And then lastly, the part 2 is where you list out your estimated qualifying rehabilitation expenses. And I always say projects, more often than not, run a little over budget. So always add a contingency to your estimates because we use that estimate to allocate funding for you. And once we set aside or we allocate funding and that number is set, we can never increase it. So if you undersell your project and we allocate funds based on that estimate, then you come in way over budget, we won't be able to bring up that allocation to match. And I'll talk a little bit more about that in a second. So the description of rehabilitation, the minimum components are that description, the photos, and a photo key, where essentially you just show us where you took the photos in and around your building. As the complexity of the project increases, so does the documentation. If you're planning an addition or significant floor changes or dropping ceilings or raising ceilings, we may require additional documentation like architectural plans. But generally speaking, for your straightforward project, the description, the photos, and the photo key plan should suffice. We are not life safety or building code enforcers, although that's very important. We are looking at the visual changes and how they will be compatible with the historic character of the property. So we do not review life or code safety plans. We do not give guidance on building code. And for furniture, fixture, and equipment, or FF&E plans, although those can be really interesting to see where people are going to put their furniture, we do not need to know that. Furniture is not under our review. This is the part 2. So again, it's might seem a little daunting when you first open it because there's a lot of very small text. I apologize. But it's all information you know. How many housing units are there currently? How many are there proposed? What's the square footage? What's the use? How much do you anticipate spending? So just take these forms line by line. If you have any troubles at all during the process, you can always reach out to our office. And then starting on the second page, and you can add additional pages as needed, this is where you'll paint the picture of what you're planning to do. So in this example, description number 1 is the staircase, and it describes the feature and its existing conditions. So the staircase shows deferred maintenance and wear and tear over time, and then it describes what they plan to do to the staircase. So refinish the stair treads in kind, replace broken spindles with in-kind turned wood balustrade spindles. So You're kind of describing the issue, if you will, and then the solution. And you'll do that for each item that you are planning to undertake in the project. And the photo key plan, which I mentioned, it does not have to be drawn by an architect. In fact, we have several really lovely hand-drawn plans and examples on our website, ranging from very simple outlines to more complex, such as this one. But photo key plans simply take the photo, so photo number 1 is the staircase, and it keys it, or it identifies where that photo was taken. So in the example here, the bottom photo number 2, if we were to receive this photo form and with just that photo, we would have no idea what we're looking at or where in the property that's located. So the photo key plan is essential for us to understand where we are, what we're looking at, and where these features or details are located in your property. So we get lots of questions about the photos in particular, and photo key plans are required, and we do require interior and exterior photos regardless of the scope of work. Because as I mentioned earlier, we review everything, even non-qualifying expenses that you're undertaking, we review everything. So if you say, I'm just doing exterior work, and then the part 3 comes in and we see that you've completely gutted the interior and all these fabulous features have been torn out, that could jeopardize any good work that you did to the exterior. So we review interior and exterior photos cumulatively. And photo key plans, as mentioned, is essential for us to understand where we are in and around your property. And it's best to submit a project before your work begins. We're here to be a resource and to work with you step by step through the process and to set you up for success. It benefits no one for us to deny projects. We're here to help you, support the historic property, support the homeowner. So we're really here to assist in any way we can. But if you've started work and the can has already been kicked, sometimes it's too late in the process for us to jump in and give guidance. To avoid holds with the part 2, so this is where we're reviewing your proposal, to avoid your project being put on hold and for us to ask additional questions, you should try and avoid ambiguous language if at all possible. So we'll see a lot of applications say, when needed, repair or replace. And repairing something is a very different treatment than replacing it. It might need to be replaced, but we'll need to know what are you going to replace it with? How is that new material going to interact with historic materials around it? Is it going to be visually compatible? So try to avoid ambiguous language and state what you're going to do. We have an amendment form where you can always amend or change your project at a later date if you find that what you initially planned on doing is not going to be feasible. So state what you want to do, and if it needs to be changed in the future, we can always review an amendment application. So projects that have a Part 1 approval, which is the eligibility, and a Part 2 approval, which is the proposed project, will be allocated funding from our annual budget. So we review projects from July through the following April of every year, and then in May and June, we allocate funding. And we have a $100 million budget each year, which sounds like a tremendous amount, and yet we do exhaust these funds. This is a very popular program. So when and if these funds are exhausted, every property within that category will get apportioned or prorated down. We don't pick winners and losers, so to speak. Everybody that has a supported project will get a piece of the pie. It just may be a little bit smaller than you were anticipating. And this is based on your project category. So homeowners, we have a dedicated $25 million, or 25% of the total pool of funding just for them. So homeowners, we never exceed that funding. So if you're a homeowner seeking this tax credit, you will get your full 30% that you're eligible for. All the other properties, including income producing and the other category, which is the catch-all, share the remaining $75 million. And that is a category that will often be exhausted. So instead of getting your 20%, you may only be allocated 18 and a half. So that's just something to keep in mind. So as I mentioned, we allocate funding in May and June, and we accept and review projects from July through the following April. And this is based on our fiscal calendar and the budget year that we allocate funding from. And we only allocate funding to projects that have approved Part 1 and Part 2s. Once you have completed all the work, so you've gotten your Part 1, your Part 2 approved, and then you start your work, you have 24 months to complete what you'd like to do, you've captured all your expenses, you photograph the building, once it's done, you submit the Part 3 application. And this is where you itemize your final expenses and you give us the after photos. And this is what the Part 3 looks like. This Part 3 form, it's very important out of all the documents. Now, all the documents are important, but this one in particular, once we review and approve the brick and mortar components of the project, this goes to the Department of Revenue. So it's very important that if there is something on this form that you do not understand or language that you are not sure about, please reach out to us. We want to make sure that any boxes that you're checking is based on an informed, understood decision. So this is what the form looks like, and you itemize your expenses there on the second page. If you need additional area to itemize your expenses, you can on additional pages. I will say that if we do conduct random audits with the Department of Revenue, so I always tell folks to keep your receipts and keep them organized and at the ready in case your project is pulled. It's just the checks and balances to make sure projects are accurately reporting the expenses that they're getting tax credits on. All right, so once you get to the Part 3 level, I would say 99% of our projects are a celebratory rubber stamp. You've done everything that you said you were going to do. We've worked with you all, every step of the way. But there is rare instances where projects don't quite meet the standards of rehabilitation yet. And there needs to be tweaks made in order for that project to be approved. This is an example here where on the left is the before photo, where you'll see, and then on the right is the Part 3 after photo. And you'll see that they did some good things. They refinished the hardwood floors, they restored the historic ceiling height, and they restored the rounded the arched upper sash windows. So they did some great work there. However, they also installed a very incompatible industrial HVAC system right through the middle of this residential space. And this was like this on all the units. And that is really incompatible with the historic character of the property and the residential use. So this is an example where we worked with the applicant and proposed that if they did remedial work to the HVAC and concealed the HVAC in a soffit along that left-hand wall, that it could then meet the standards and be approved. An application, or the applicant did do that. This was an approved project that got awarded tax credits once that HVAC was concealed. So, but I don't like ending on a negative note about remediation, so we're gonna show some examples of properties that have used the tax credit over the last 20 years. We celebrated 20 years last year. So everything from relining copper gutters to window and plaster restoration. We've seen some really wonderful and projects that span from very small and minor to large overhauls. So this program can really be flexible to a lot of different projects. And this is maybe difficult to see in the photos, but there was a tremendous amount of mold on these walls. And the property was vacant for several years. So it was a Main Street building where it's commercial on the first floor and residential on the upper floor. So this is the upper floor residential unit. And it was just great to see what an amazing job they did, but then also bringing a new residential unit right in the heart of downtown was great. This is in Jefferson County. And we see all kinds of different properties. Industrial, this was an industrial warehouse. So it doesn't just have to be residential. There's a great property in Boyle County. This one's a great example because the homeowner actually restored the windows themselves. So this couple learned, they took a course on window rehabilitation, and they restored all their windows themselves. They look absolutely beautiful. And they were able to get tax credits on all the materials that they purchased. So that is an option as well. If you're a can-do DIY type of person, you can, and you're going to meet that $20,000, you can still qualify for tax credits. So we are, just to let folks know, we are accepting nominations. If you have a great project in mind that you would like to nominate for a preservation award, we are accepting those now through the end of the month. This is a project here on the left, the Wigwam Village number 2. They did tax credits, and they're doing a great job restoring each wigwam as they're able, and they won a preservation award last year. So this was just published earlier this month, and I just want to highlight how well Kentucky is doing. This is the numbers of federal tax credit applications across the nation, and Kentucky ranks 4th in Part 1 and Part 2 approvals. And I want to emphasize approvals because there may be a lot of applications that are submitted, but these are projects that are supported by the National Park Service for federal applications, and we rank 4th in the number of those applications across the nation. So we're really swinging well above our weight behind New York, Ohio, and Louisiana there. So we're doing great in terms of the number of applications and the popularity of this program. In terms of Part 3 approvals, we rank 8th. So that actually indicates that we have more projects in progress than currently approved, which is great. We're only going up. So it's been, and looking at a 4-year look back, we ranked 10th in the number of completed projects. So again, over a 4-year period, we ranked 10th. As of last year, we ranked 8th in project proposals. We ranked 4th. So all is to say that Kentucky has a very robust and popular program, both at the state and the federal level. And we have this report if anyone's interested on our website. Speaking of websites, we have made some major updates lately. If anyone's been to our website a few months ago, it looks a little different now. We have added a tremendous number of new resources, links, and video tutorials. In fact, this is out of date. The video tutorials are no longer coming soon. They are live and published. We have a 3-minute overview, so you can only have to hear me yap for 3 minutes. We have a step-by-step guide which walks you through the application forms literally line by line. And then we have a how to photo document your property tutorial, which shows you how to photograph a property, how to make a hand-drawn key plan, and how to upload those into a photo form. So these tutorials are meant to help you through the entire process. And you can find all of those resources and our application forms on our website, heritage.ky.gov. If you're on our homepage and you scroll down to the money bag symbol, that is the tax credit page, which will bring you to this website. And this is also where you will submit your application once you have it downloaded, filled in. Our application and payment portal are right there at the top. So just a real quick recap. Owners of properties listed on the National Register of Historic Places, either individually or part of a district, they are credits towards your income taxes owed based on how much you spent for the project. You might be interested in applying because you can get 20 to 40% of your project costs awarded back for work that you may have already been wanting to undertake anyway. You can get additional information on our website. You should apply prior to starting the work. And if you have already started work, reach out to us to see if it will be a good fit to apply retroactively. And you can always reach out to me to ask general questions. I field public inquiries, and then once you actually submit an application, it goes to one of our 3 dedicated reviewers. So I'm happy to answer any questions that you have.
Katie, could you just briefly describe what the standards for rehabilitation cover?
Yes. The standards of rehabilitation are guardrails. So there are 10 standards, and they are admittedly pretty loose. They say things like maintain the historic use, repair prior to replace, new construction and addition should be reversible. So they don't give black and white guidance, more so they are guardrails to keep people celebrating the historic character of that particular building while allowing contemporary interventions. So we have, like I said, 4 staff, myself and 3 reviewers, who can help give you guidance on how the standards might apply to your specific unique building. Obviously, a building like this that we're in is going to be, we're going to interpret the standards a little differently for this building than we might for the wigwams, because they're completely different buildings. So just keep in mind that the standards are meant to be guidelines, and we're really just hoping to celebrate the unique character of your property.
And they are found,
Oh, they're found on our website. Yep, they're found on our website. Let's see. If you go to our website, you scroll down, there's a button for resources and guides, and there are guides, there's the standards, there's guides on how those standards are applied to specific types of buildings. So we have examples for how they apply to barns, how they apply to Main Street commercial buildings, how they apply to row houses and shotgun houses. So lots of resources. Yes?
Say, for instance, you have a Main Street building that has commercial on the bottom, residential on the top, and, you know, whatever else applies in between. If you need a roof, work on the residential portion, and then a continuing use, not remodel per se, but, you know, rehabilitation or something on the bottom, now with our Main Street buildings, obviously each section has a different address, per se. Would these all go under one building, or would it be all separate? So for example, if I use 2 spaces that were commercial, 1 space that was residential, all 3 have different mail addresses, but are all located technically within the same building.
Right, so we go by building, because, yeah, those street addresses can change over time, but we go by the roof overhead and the walls, you know, if there's 3 units, then what are you proposing to do with those 3 units in this one building, in this one project? Does that make sense?
Yes.
Okay.
So any of those items would have to meet the minimum $20,000.
Yes, so here it might be easier if I go back to the use categories here. So yes, let's say, and for Main Street structures, let's see if we can go, current slide, there we go. So for Main Street structures, if you have an income producing property, residential above, that's rented out, the entire property can qualify for the state and federal program if you meet the adjusted basis. If you can't meet the adjusted basis, you can still apply under that other category down here with just a $20,000 minimum. Now the caveat, or not the caveat, but an interesting thing about Main Street buildings is a lot of times folks actually live in the residential unit above as their primary residence. If that is the case, the entire building, including the commercial unit below, the entire building can qualify for the 30% state credit. If that is your primary residence, in part or in whole, the whole building can qualify for the owner-occupied. Yeah.
Can I correct you? Did you say that you have to submit this application before the work is done? I know it has to be done within a 24-month period, but you cannot backdate the start of it to say, like, I want to include it within this 24-month section of a year ago, now that we're learning about this, and then continue for the next year.
Right. Typically, no. The short answer is no. There are special cases or circumstances where we may be able to approve a retroactive application. We have a reach back period. So in order to prevent folks from, saying, oh, well, I spent something in 2012 or 2005, we have a very short reach back period, which is 24 months from our current fiscal calendar. And our fiscal calendar is not in January, that would be too easy. So our fiscal calendar is at the end of April. So right now we're in our 2026 fiscal calendar, but as soon as April 30th hits, we will be in 2027. That becomes important if you're trying to reach back, because if you have project expenses that were in 2024, let's say, you could only reach back and capture those 2024 expenses if you applied before our fiscal 2026 year ended. So there's a very short reach back window. Retroactive applications are difficult, one, because of that reach back window. Two, if there is, the photo documentation requirements must be met. So if you proceeded with work and you didn't take photos, then we won't be able to accept the application. And then also if there was work that was done that just is incompatible, or materials that are incompatible that were installed, then it may just not be a good fit. But we do preliminary review meetings for any applicant free of charge. If you have a question about either a retroactive application, a proposed application, anything at all, you can reach out to us. We'll do preliminary review and let you know if it's going to be a good fit. Yes?
What if you have started the project, but you didn't know about this?
Yeah.
So you show up tonight or at a meeting somewhere else like this and you're starting to learn about it. And you missed that deadline for what could have been, but you're got enough of the project left that you still gonna do way more than 20,000. Can you start there and move on?
Possibly. It depends on what it is. So we can't approve a project that's incomplete, but we also can't jump into a project that's kind of in shambles, if you will. So, because we really have to review the condition of the building before the start of work. We have to assess what was the historic character when you began, and is that historic character being retained in the project?
And do you do that by a site visit or the pictures?
Usually pictures.
So
Yeah.
if you have the pictures prior to starting,
Yes, if you have before photos, and then you can submit current photos, and we can
and then you're
assess.
planning moving forward.
Yes, yes. And sometimes this is really clear cut and easy. Let's say that you already replaced your roof and it's outside of the window, but you still have a kitchen remodel or HVAC to do. That's a real clean cut divide of, okay, roof has been done, we can't claim it, but we're gonna move forward with these other separate and distinct.
Yeah, it's kind of what I'm talking about, yes.
Yeah. And that kind of leads into something I should have mentioned, is that this program does not have to be a one and done. You can reapply in the future. So let's say you want to tackle something specific this year, but you have plans for 2 years down the line of maybe doing additional work. You can do that. Just each project that you apply for must be separate, distinct, and complete. So if you say you're going to do the roof, the whole roof has to be done as part of that project. And then you can come through for a separate scope of work at a later date. So we actually encourage people to use this for regular maintenance and repair. All properties require maintenance and repair. This is just a nice incentive that can sort of pay dividends, if you will.
I have a couple more questions.
Okay.
What's the criteria or definition of historic when you're trying, like the true definition of an antique is defined, right?
Yeah.
100 years old, although we know antiques can be antiques without being 100 years old. So is there a defined definition of historic?
There is. It's 50 years old. It's 50 years old. So, but what we, and a little phrase we say is, not everything that's old is historic. So,
correct.
Yes, and not everything that is old is significant. So just because something is meets the 50-year mark doesn't mean that that material or feature may be significant to conveying that history. So.
And the last question is, I truly don't understand about this building or any building that the city may own or any other government entity who don't pay tax.
Right.
So when you incorporate the word tax from a non-taxing entity that can benefit, I don't understand that.
No, very valid question. And I actually didn't talk about this, so I'm really glad you brought it up. For applicants that are tax exempt, so your religious institutions, your local governments, your not-for-profit 501Cs, they cannot use the tax credit because they do not have tax liability. So they must transfer or sell those credits through a private agreement with a financial institution. You essentially have to sell them to a bank. We do not get involved in that private transaction. But it's a way for those tax exempt entities to still utilize the program and benefit from the program. Now, I will just say, if that is the case, if you're a 501c, if you're a local government, if you're tax exempt, you should develop a banking relationship prior to applying. We have heard anecdotally, again, we don't get involved in the private agreements, but we've heard anecdotally that financial institutions have been reluctant to purchase these recently. I don't know if there's been some changes, but they've been reluctant to purchase these. So I would say reach out to your local banks to, if you've got a banking relationship already, speak with them about tax credits, send them to our website, have them email us or Department of Revenue if they want to learn more, and develop that relationship before you go down this application process. Any other questions? Thanks, everybody. Yeah, that's it.
Hey, thank you so much, Katie. If you didn't sign in, please sign in. If you don't mind, put an email address on there. Your information will not be sold. But I do want to email out the presentation that you did tonight with your email address on there. I'll send you the email so you have that. This will be on YouTube, so you can go back and review it. And we appreciate you coming out tonight. So thank you. Have a good night.
Thank you.
Thank you.
Thank you for Main Street.